Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 21st of July. So I've seen another big week of moves this week. We've seen some very big moves in the currencies and in the indices in anticipation of what the earnings are going to bring us. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so I'll start out here with the Aussie USD, and you can see that we sold off from the 68 sort of 80 level. No real surprises there. We know that it was pretty strong resistance, and it came down in a relatively orderly fashion. We saw a big move in the last candle here. Obviously, this is the daily chart, and we did see a big rejection. It did try to actually rally up to that point again, but we saw a big rally back down to around that sort of 67, 80 level, which is no real surprise. We can see that we've got, even if we put our crosshair on here, we can see that we've got another resistance point at this level. So no real surprise to see it break through there and then come back and test it on the bottom side. Look, it's very, very close to the 20 moving average. You know, I'm not surprised to see it here. If it does find support at around this level, I could probably see it getting back up to the 68, 80 area relatively quickly, but it needs to find support here and now. If it breaks through any lower, then I think it's going to struggle, and we're probably going to start looking at moves back down to this green line here in the low 67 cent mark. So realistically, it's got the 20 moving average to bolster it. If that can hold it up and keep above this level here, we would be looking at a move back up to around that 68.80, but a daily close below that 20 moving average. If we see a daily close below here, then we can start to target that 67 cent mark. So not bad movements on VIT for the whole week, really, but yeah, it's at a very important zone now. It even needs to hold up above this level, or if we get a daily close below the 20, we'll look for trades below it. So not bad going on that one. We'll move over to the US dollar CAD, and this has had a bit of a rally. Look, it hit the 20 moving average as we'd probably expect, and then it did sell off it a little bit. It's definitely finding support around this 131.50 area. No big surprises there, and we are starting to get a bit of divergence kicking in. So, if we look at the MACD down here, we can see that we've got divergence pushing up, and if we get a close above the 20 moving average, that's going to be the telltale sign that we're going to start moving up again. I think we get a daily close above that level, and our next real target is going to be around that 133.50 area. You can see all this support right through there. It was support right through this whole zone and resistance at this point here. So if we get a daily close above the 20 moving average, we'd look for a move up to that, basically the 133.50 area is what I'd be going for in the first instance. That's probably the round zone for where it wants to go. But if it fails to break through the 20 moving average, we could look at placing shorts down to around that 131.40 area, which is where it was previously, not very far away from where it is now. But at the moment, it's got to do something and see if it's got to rally up to the 20 moving average and sell off it, or close above the 20 moving average. Either would be a reasonable scenario for this one, and I'd be happy enough to get involved in both trades because I think they're both viable from a technical standpoint. We'll move over to the US dollar yen now, and you can see that we had that rally where we needed it to rally. We did say last week that this is the point where it needed to reverse because it had very, very strong role reversal elements between the resistance that we saw right through here and, of course, the support that we had for about 3 or 4 days. It was a very, very big sell-off, though, and the rally effectively all but hit the 20 moving average, but the 140, sort of 40 area is where you'd really be going. You can see that we've got previous resistance there as well. It's at an interesting zone now, though, because if it does fail here, it's going to continue down in an orderly fashion where you would expect it to actually sell off, because it is probably is only about a 38.2 pullback at the 20 moving average. It would be a 38 fib pullback, which is a pretty reasonable level to look for shorting opportunities. So we'll see how this one goes. If it does fail to break through the 20 moving average and starts to track down, then we're going to look at getting it back down to the low of around that 138 mark. But we'll see how it reacts around this 20 moving average. Look, it's going to be it's a big week of action next week. We've got a lot of big earnings starting to come out, and it's going to really impact a lot of these currencies as well as the indices. So definitely at an important zone. If we get a daily close above the 20 moving average, we'd start to look at the 140, 180 area as the next level of resistance for it, so that's what we'd be looking for the long. But if it fails to break through the 20 moving average and we start to get a tracking down of a lightning bolt effect on a 4 hour or 1 hour, we'd start to look to target the 138 again. So yeah, it's in a good zone to actually get a decent trade out of it. And again, I haven't really got a bias on this one. I'd be happy enough for it to go in either direction. Both of them are both viable trades. Over to the dollar index, and it rallied where it needed to rally. A lot of these things hit support and resistance that we talked about last week, and they did what you would expect at these very important zones. So there's no real surprises here. I think it did everything we needed it to do. It bounced off, and it's gone up relatively strongly, but it is at a very, very strong point of resistance. Now you can see right through there, we've got a very, very heavy resistance point. I'll pop a line there so you'll see what I'm talking about. And you can see all this support right through here is going to prove to be resistance for it. And it doesn't mean it's going to stop there, but it's a likely position for it to turn around if it's going to. The euro is obviously the beneficiary of this. We'll look at that in a second. But if it has rallied up to a point where if you were looking at taking profit on the long opportunity here, this is where you would look at it and seriously look at taking and reducing your position, because there is resistance here. And that's you don't want to be really trading into that unless it actually breaks through and tests it from above. But the euro is the one that we're really looking at here. So if the euro sold off where it needed to sell off, of course it hit the it earned as high as 112, nearly 80 actually, 112.74 I think is as high as it got. But it reacted in the opposite way that the dollar index did, of course, and it has sold off reasonably well. Again, if it's going to really, I'd probably still a little bit expect a bit more weakness here. You can see all of these points right through here that were pretty strong resistance for it, and it did sell off that level. So that is probably the point I would expect it to find support. If the 20 moving average catches up and it does weaken a little bit more, that would be the ideal trade, because if it is going to bounce, this is the area it's going to bounce from at around that sort of 110.80 mark. I would like to see the 20 moving average catch that zone, and I'd like to see it drop a little bit further. Then a rounding bottom effect there on anything on a 1 hour or a 4 hour change of trend, so a series of higher highs and higher lows from that level. And we would be looking at this target as the previous high would be the first target you'd go for. That would be a pretty good level, really. You'd be looking at about a 38. That'd be about a 38.2 fib as well. So very, very good trading on that, especially if the 20 moving average catches up. If it turns around quicker than that and it starts to track up higher, then that's an aggressive fib move. It'll probably be the 23. But again, we do what the market tells us, and if the market looks like it's going to go strong without reaching the ideal support, then we could look at opportunities on the smaller time frame to join in and try and get to those previous highs again. But the previous highs are where I'd be aiming for on this one, because that is the easy trade. All right, and we'll move on to the S&P 500. All right, and this one, again, sold off, hit the target of 45.50, so hopefully you're able to get involved in that trade, because I think it was a pretty easy trade to get involved in. This was a perfect setup for it, bouncing off the 20 moving average, but it certainly has hit its target now, and it's at a point where it's a do or die for it, in the sense that if the earnings are good and they start to really ramp up next week and they're within expectation, or actually even exceeding expectation, we could definitely see a bigger rally than this. But if they start to fail and hit the marks, a little bit less than what the market would expect, then we're going to see a bit of a pullback you would expect. And really the 20 moving average is the first place you'd see it. Back to this 44.50 area is the likely scenario. If it is going to continue to weaken for the rest of the week, this is the area that you'd be thinking it's going to aim for, which is the previous support, resistance, which should become support, and the 20 moving average. So if we get that pullback, this is the area that you'd be looking for that reversal. But again, this is going to be very, very dependent on what the earnings are going to give us, and of course we can't predict that. So I'd be inclined to wait for that. If we see weakness in the last session of the week and it is starting to sell off a little bit more aggressively, this is a target I'd be aiming for. And if you get in on a 1 hour pullback, 20 moving average pullback or something like that, where the momentum is kicking in and shifting, this is a target that you could go before Monday. So if we're sitting here on Monday, I would be highly reluctant to actually trade it until I actually let a couple of earnings play out and see how the market reacts on Monday from it, because it could really push the market around, and technicals sometimes break down very, very quickly if things start to not go as expected. And by that I mean missing earnings and things like that. So we're going to be very, very mindful that we are going into a very dangerous period for setups, and we do know that we are at resistance right now. So if we see continued weakness in the next session, look for a move down to around that 44.60. But of course, if it gets up higher, I would just wait for the earnings to start kicking in, and let's just see if we are going to get that extra momentum. So I hope you've had a great week's trading. I think we've had some really good opportunities. All of our targets have been hit, and hopefully you've been able to take advantage of those. But just be mindful of earnings next week. So we'll keep an eye on these positions, and it will be very, very interesting to see where we are next week, because I think the zones that we've isolated today are going to be either hit or they're going to move in the opposite direction, at which point, we can get involved in the different side of the trend. So have a great weekend, and I look forward to seeing you all next week.